Hi, hello. Yeah, so I just want to address something that I've just observed within our Discord actually. This will help minimize losses actually. So let's get started to it. So you find a scenario that we have price action goals like this, right? And we have something drawn liquidity right there, and that's our target, right? Let's say that's our target, and price just moves like that. We anticipate that price will reach our target. That's it. That's what we always do on our chart, right? But there's something that we tend to ignore. What we usually ignore. We usually ignore opposing PDOA. We usually ignore the effect of the opposing PDOA. What do I mean? That means if we are going high, we tend to ignore the opposing PDOAs, which shows price to go low. Like, what do I mean? Let's say we're going high, we have a favorable gap that's low, and price is going into that favorable gap. We always anticipate that that favorable gap will retrace price into our FEG or something like favorable area just to continue high. But remember, any PDLA does two things: either hold the price, or let's say in technical terms, either price will learn liquidity or sweep liquidity. But as I've observed within our Discord, as we know, price will continue high, and we have our drawn liquidity, we have our bias as bullish. We tend to ignore the sweep of liquidity. We tend only to focus on liquidity. So I just want to show you something. This is the typical thing we all wanted to see within the charts, right? That means that we want to see that if we're going high, we want to see price just goes high. We want to see a fair value area, which is quite nice, something like that. And we want to see price retrace onto that fair value area or fair value gap. The best is fair value area overlapping with fair value gap and continue high. So we just take our entry around this fair value area just to continue high. But what I can tell you guys, you always see a continuation, but there is also reversals. And where do these reversals happen? These reversals always happen on swing points. You take that entry, right? You anticipated that price will continue high onto your target. But on the other end, there is a guy also anticipating that price will create a sharp turn to continue low. That means if a favorable gap gets created to continue low, on the other end, someone will short the market from that favorable gap. Oh, that's quite big. We short the market from that favorable gap and just target 1 to 2 or 1 to 5. You never know who's going to be the king of this. So something close to that, take an entry off of that, and swing point one to yeah, just that. That's an entry, right? Taking that entry. So just know that if price has reached any swing point, just wait for more confirmation. What do I mean? On my end, I tend to do this just to avoid to be leaped off or just to lose those entries. What do? I just want to see the market or price action return into this fair value area or fair value gap and follow through, meaning that creating another gap. That means if price follows through and creates another gap, simply means we have another fair value area right there. If I get this fair value gap and a fair value area, then I anticipate price will go high, retrace back onto that, and just target that. And that is what price might do. Why? Because as you can tell, we had fallen through this got favor area got respected, favor gap got respected, and we also disrespected this swing high right there. And also we just disrespected that, means creating a favor area to continue high. Simple as that. You don't need just to enter off of that. You need more confirmation. And here's the tip. Always and mostly is when price just disrespected that swing high or swing low and you have your target right there, this area is what we call area of opportunity. By far on my end, I just call that area of opportunity. That means it has less resistance, meaning that no any opposing PDLAs until we reach our drawn liquidity. Here is where you tend to take your entries and price might move aggressively onto your target depending on what time frame you're looking. Higher time frame, calendar. That means news will move your price aggressively. Lower time frames, sessions. That means sessions will move your price aggressively. So that is what I wanted to share with you guys. Hope you have that into your mind. And yeah, let's have some fun trading. Great. Bye.